Wall Street, which is they are looking to figure out where's the intersection of cryptocurrencies and traditional finance. And obviously stablecoins, I think, is one area where they've said, hey, not only is this something that the market wants in terms of the free market of users on the internet, but it's also something that we can benefit from ourselves as well. And you hear many of the large banks and financial institutions talking about using stablecoins themselves. So it's something that is touching on crypto, but it's something that they understand and they can use themselves. And so I think maybe a word of caution is that every crypto company that now tries to go public may not get the same welcome. It may be more of a stablecoin story than it is a crypto story. But then there's companies like, Gemini, which are great businesses and seem to have done really well over the years. And so it's really just going to come down to not are you a crypto company or are you not? Are you a good business or not? So in world, a 3% move is, just par for the course. Yeah. But look, I do think that we have an entire generation of investors. I call them either self-directed investors or independent investors. Retail, it now owns something like 36 or 38% of U.S. Stock in the market. It's the highest percentage they've ever owned. These people are used to volatility, and a lot of it comes from the Bitcoin and cryptocurrency world. But now you're starting to see volatility trickle into the U.S. stock market as well. And obviously things like tariffs on, tariffs off, and other kind of geopolitical events are leading to that volatility. But what you're seeing is that retail has convinced themselves they are just going to buy the dip. And as they continue to see markets go down, they buy the dip, and then we get those recoveries. And I think that's why you see institutions sitting on the sidelines and not having as much exposure to U.S. equities as maybe
or a gold analog, rather than actually being what you use, for transactions across the globe. Does it make it less attractive?
Well, I think it's a great question because because Bitcoin, I think there's three things that people want Bitcoin to be. They want it to be a store of value, a medium of exchange, and a unit of account. See things priced in Bitcoin eventually. In order to get there, what we are seeing is that Bitcoin is succeeding and the US dollar is succeeding. They're both strengthening together, and it is the weak fiat currencies that are kind of falling at the feet of those two. Now, one of the things that stablecoins have brought to the market is there's a lot of people around the world that say, I would like to use Bitcoin as a savings account. I call it a digital savings account. I would like to spend something that is not going to be worth more in the future. And so I'll use the digital dollar and these dollar stablecoins. And so if you think about today, the average finance user, they have a savings account, they have a checking. There is a long path to get there. And the sequence right now is, why would I want to spend my Bitcoin if it's going to be worth more in the future? Right? I want to spend the dollars that are going to be worth less in the future.
How many stable coins based on the dollar do we need? And is Ether the best blockchain network to carry it on? Can it be carried on a Bitcoin blockchain? See, I'm telling you, I'm a bit in the woods.
Look, there's a number of different stable coins that have different kind of twists to them. So if you look at Tether, for example, Tether has really said, what we want to do is we want to take the US dollar, which is one of the best product market fit products ever created in human history, and we want to bring it to people in the emerging world. They have something like over 400 million users. I think they're gaining 30 million users per quarter. Just crazy numbers, $13 billion in profit, over $85 million in profit per employee. Amazing business. Circle has said, well, let's go and actually.
So you just saw this morning, we had a PPI print, a producer price index print, which was far lower than people expected on the recent numbers. And the reason for that is economists are thinking, and I tend to agree with them, is that the producers are unable or unwilling yet, or trying to not pass through those increased costs. And so, they're getting lower margins on that themselves, and possibly waiting to make orders in order to draw down other inventory they have to produce with, and wait to see what happens. But again, every single day we walk in and we don't know what's going to hit the tape. Are we gonna have another headline from Trump that is very strong on tariffs? Or are we gonna have a period of great uncertainty? And that's what you're seeing. And Bitcoin is definitely caught up right in the middle of it.
Yeah. I mean, I guess it has caught up. I wonder if you could maybe just paint a little bit of a picture of, so gold has had a great start to the year, and left, in some ways left Bitcoin enthusiasts feeling a little bit left behind. We know, or I would say, there's a strong indication of a relationship between sort of Bitcoin trailing global liquidity, and you mentioned Powell and the possibility or the likelihood of more injection of more money, time to print. So
their own currency, which is the case in most countries, in many countries. So you go around the world, people want to hold dollars rather than bolivars or pesos. It's because they understand inherently that the dollar is stronger. It's got more confidence in it. But we need countries to buy treasuries. That's just full stop. That is absolutely paramount. And so what the danger that we saw here when we got through the first couple of months of this administration and Trump started talking about the trade war, the danger is that you've got countries like China that may, or even Japan and other Eastern countries that may dump treasuries, in defense. Let's say they were making, 1 basis point. If they levered it up 100 to 1, that's a full percent, right? So 10 basis points, 10%. So they were using so much leverage that when the Russian ruble was devalued and bond prices went crazy, these spreads blew out and people heard about it. Here's the thing, and this is what's crazy about it, Scott, is that this was such a big trade. They had $1 billion worth of capital that they had levered up to what we believe was over 100 billion. So let's just call it 100 to 1, $100 billion. And they were blowing up. Now, not all this was in treasuries. This was in converts. It was in risk arbitrage, merger arbitrage, and all kinds of trades. But they were levered up across the board. Well, overnight financing rate, which means that you take a bond, a treasury, you lend it to somebody, they give you dollars for that overnight, and you pay this overnight rate. Well, that overnight rate hasn't spiked. You see that spike when there's a liquidity crisis. It hasn't happened yet. It has gone up a little bit. The average is going up, so I am watching that, and it is a concern. However, we're not there yet. So I don't want everybody to think that I'm calling that this is happening. It's not, but that's a concern, and it's such a deep concern. It's such a big concern that you had the Brookings Institution put out a white paper suggesting the Fed become a hedge fund to deal with it, which is just mental. So that's something else I'm looking at. I'm looking very closely at where the bond spreads are, where the SOFR spreads are, where the yields are, and how much demand there is in the treasury market. And that's just something that is built on, completely reliant on expansion of debt, expansion of leverage and borrowing. It must have it. Lynn Alden talks about nothing stops this train. And that's what we're talking about here. There's nothing that stops this train because we're built on that. We're built on that borrowing. And so you need expansion of debt and expansion of borrowing to have expansion of pricing and all these things, right? So what is in that number? Well, you do have M2. You've got the central bank and money supply. You've got central bank liquidity measures that either they're expanding liquidity or contracting it. That's either by raising interest rates, contracting liquidity, lowering interest rates, expanding liquidity. QT, quantitative tightening, they're out there selling some of the assets on their books. That's quantitative tightening. That means that they're contracting liquidity. They're taking liquidity out of the market. Or vice versa, QE, where they're printing money. They're out there buying assets with capital that wasn't prior. $2 for every dollar that he bought Bitcoin with right now. That's the conversion rate right now, or the multiple on underlying NAV, net asset value of the Bitcoin. If you take every single bond and every single share and you convert it in, and you assume that's a common, so it's fully diluted, then you would say that his stock is now worth about 2.1 the underlying Bitcoin. So every single dollar that he buys from a convert sale, the stock goes up 2 to 1 right now. And so it's been great for shareholders. And so that is a very unique situation because he's been able to tap. We felt it at the Bitcoin Opportunity Fund where we were raising money in 2023, 2024, and we were hurt by this choke point 2.0 where banks just refused to do business with anyone who had cryptocurrency ties or Bitcoin ties. We had investors trying to wire us money, and the wires were canceled. They were returned. They were refused. We even had a couple of people that were debanked from their banks because they said you're dealing with shady things, and you're no longer eligible to be a customer here. Just insane stuff. So, and meanwhile, we're a Delaware, and they can now do it without having to have a liability on their balance sheet. So what does that mean for customers? Well, it means that they're going to wade into this space and start offering the ability to buy and sell Bitcoin and sell other cryptocurrencies, I expect, right there in your account. Hold it there in your accounts, and you'll be able to eventually, right away, but eventually they're going to create products around it where you can borrow against it, not have to sell it. You may be able to pledge a certain amount of your Bitcoin in order to get a mortgage for a house instead of having to sell it and pay the capital gains tax on it or whatever. You can borrow against it or put it into escrow.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.